My beautiful friends, how you guys doing? I want to show us something very interesting that happened here on Pippin USDT, and it has something to do with order blocks. Something very important you need to watch out for if you trade smart money concepts. If you use order blocks as key zones for your setups, I want you to pay attention to this right here. I want you to notice how there is an order block here. Okay, you can see that key level. That's an order block, but that order block is not valid, all right, judging by some of the things I taught in my previous video about order blocks. If you've not seen that video, please check the linked video in the description. It is actually a course. Okay, so this right here is an order block. So you can see that we had an order block there, had a breakup structure, all right, the market pumped, then created internal range liquidity, all right, moved up, came back down to sweep all the liquidity here. Some traders would have taken a trade from this level. They would have been expecting the market to get to this point, and then they would take a buy from here, because if you come to this setup which I showed in my order blocks video, all right, I talked about waiting for a sweep of liquidity before getting into the market. So we had an order block here, the market pumped, created liquidity, pumped again, came back down, swept all the money here. So I talked about waiting for this liquidity sweep, and the moment the market gets here, that's when you start looking for a buy. All right, so this setup played out on that Pippin USDT, but you could have taken a loss, and I'm pretty sure there were some traders who took a loss on that trade pretty much because of this right here. All right, I talked about waiting for the market to range a little bit and then waiting for a breakup structure, all right, a breakup structure to sweep all the liquidity here. You have to wait for a sweep of liquidity, all right, and then your order block, make sure it doesn't have liquidity below it. And that's what guarantees that when the market starts coming back down after sweeping this liquidity, that's what guarantees that this your order block, all right, is not going to be mitigated. In other words, that's what is going to guarantee that as the market is coming back down, it doesn't go beyond your order block. Because if liquidity is below it, sometimes the market can go beyond it, okay, sweep all the money there before reversing. And that would be the mistake to make here, all right, because you can see the market ranged a little bit, moved up, and then created an order block right here. So if you chose this order block, the mistake would be that there is liquidity sitting below it. All this consolidation here created a pile of liquidity. So when the market starts coming back down, can you see it? When it starts coming back down, clearing all of this liquidity here, there is a high chance that it might not respect this order block. Okay, and that was what happened. It didn't respect it because this order block has got liquidity sitting below it, and that was why it came back to this zone. So a better order block would be this right here. And the reason is because it kind of mirrors the setup I just showed you. All right, you can see the market ranging a little bit, then dipping to create an order block around this region before moving up. All right, and of course you must break structures. If you see my order block video, all right, I talked about a number of things to watch out for. There must be a breakup structure, there must be a sweep of liquidity. So notice what the market did, kept moving up, broke structures, came back down, swept all this liquidity, didn't respect this, but came to this, all right, respected it. And after that, what happened? The market started buying from here, and then it went up, all right? So that would have been a lot of profit. And notice what the market did again. When it came back, it didn't respect this, all right? It came to respect this, all right? So before you use this setup, always wait for a consolidation, wait for a sweep of liquidity, then select that order block, ensure there is a breakup structure. If there is fair value gap protecting it, perfect. Then after the engineered liquidity or internal range liquidity, all right, wait for a sweep of it before you buy. And don't just buy, all right? When the market gets here, move to lower time frames, watch out for your entry setups to play out. It could be a confluence of a number of factors. It could be this same setup, right? Because the market is fractal, right? It could be candlestick patterns or whatever, right? Once you have gotten your confirmation, you can just buy from here. This is a buy setup. Of course, we've got a sell setup for this. Still pretty much the same concept. Always wait for a sweep of liquidity. The market respects liquidity. Okay, that's it. Just wanted to point this out. Keep watching our videos. If you want to see old videos in the series, it is on the playlist section of this channel. You can also check in the description of this video. Bye for now. See you in another video.